The markets have corrected by over 15% from the top. This has got all of us investors worried. But the question that we need to ask ourselves is, should we really be worried about these short-term moves? Let's see in this video. I just want to explain the reasons why we should not look at short-term moves. While it will have an impact on the long-term performance of the indexes, what I've seen in the past with the data is that these short-term moves over a period of time tend not to add significant factor to your long-term returns. The case in point is this particular chart. Here you can clearly see that I have mapped indexes, lot of sectors, medium term, short term and long term returns. If you notice, the indexes pretty much include Nifty, Nifty Junior, Nifty Mid Cap, Nifty Small Cap, and also it includes most of these sectors like Bank Nifty, IT, Pharma, Nifty 500, Nifty FMCG, Nifty Energy, Nifty Realty, Nifty Auto, Nifty Metal, and Nifty Media. This is as exhaustive as it can get. And I've also mapped the recent performances right from 1 day performance to 1 week to 1 month to 3 months, 6 months, year to date, 1 year, 2 years, 3 years, 4 years, 5 years, and 10 years. Again, I have tried to capture as much of information as possible. I thank Bloomberg Quint for sharing such great information free of cost on the platform. Now, if I were to plot these charts across sectors and indexes over all these time frames that I spoke to you about, you would get these various different looking bars. Now, if you notice one thing, except for Nifty Media and Nifty Auto, you would see that pretty much as we move from left to right, which is as you increase your time frame from 1 day to 1 week to 1 month to 3 months to 6 months and above years, you would see that the bar tends to get on the positive side. While there is no clear pattern to say that the 2-year returns are higher than 1-year return, one thing is pretty much clear is that most of the returns on the right side of the chart is positive. In fact, even in Nifty Auto, it's only the 4-year performance that is in the negative territory. Otherwise, it has always been positive the moment you transfer your viewing period from days to weeks to years. Of course, Nifty Media has not done very well across various time frames, and that's the reason why, if you notice, this particular bars are deeply negative, almost equal to the return that you have seen on the negative side in the shorter time frame. Nifty Media thus is the only outlier in the story of thinking short-term moves affect your wealth creation. You would be surprised at the kind of bars that you see here on the Nifty IT. While even they have shown short-term volatility, in the longer run, they have ended up creating immense amount of wealth for the investors. Sectors that we consider very cyclical, where you don't know how to predict the EPS growth, like metals, have also shown great performance over medium term. Though their longer term returns are not as attractive as many other indexes, but you could notice clearly is that their medium term moves have been pretty fantastic. In cyclical stocks, timing becomes extremely crucial. That's the reason why many fund managers tend to avoid cyclical companies. The other interesting observation is in the Nifty 500. So the return has been more or less been very consistent in the range of about 15 to 20% most of the times. And that has been the pattern across all time frames for most of the sectors. You would see that there has been a lot of underperformance. There has been a lot of negative returns for companies, especially sectors like banks and small caps and mid caps, even Nifty. But over the medium term to long term, the bars tend to move up and the returns tend to go up. While I'm not saying that short-term moves does not matter in the longer run. They definitely do. They also are important in your overall wealth creation journey. But what I'm trying to say is that because of short term moves, if you're panicking and if you're exiting your investment that you kept for long term, you may end up not creating wealth but destroying wealth. After all, when your time frame is long term, try to keep your mind as cool as possible during turbulent times, and especially times like these where media comes and plays a huge havoc on your mind. There is going to be an event all the time, every time in investing periods. Sometimes it can be war, sometimes it can be a disease, sometimes it can be a virus, sometimes it can be your own internal country problems. But what you need to understand is that wealth creation takes a lot of time. Wealth creation doesn't happen overnight, and good companies go through these and survive brilliantly during the times of crisis. And therefore, we always request you to create good quality portfolio of stocks or funds or mutual funds so that they can survive through this crisis period. And in the end, when you really need the money, you have substantial wealth created in your pocket. I hope you got the point what I'm trying to make out of this very short quick video. Please do share your feedback. Good luck, happy investing.